1 hour. Today I closed my position and reopened short, but it was really bad decision. I was DCAing with you guys since 67, starting of 67 to be honest. But when I saw this volume here, I changed everything. I stopped my long, I switched to short, and then I stopped my short again. So what I'm doing wrong with the volume?
Perfect. It's not that you're doing something wrong at all. Again, this is a matter of perspective, right? So basically, how the developers come up with the mathematics, and then how we reinterpret those mathematics, how us technicians give feedback, and usually that's where the loophole is, right? So it's not about how everybody else or majority of people takes it. It kind of like narrows down on a couple of us. So that's why that's very important, talking about your experience here. So let me go ahead and share my screen. So I'm going to be giving you a couple of tips and tricks, and then we're going to be taking a look at back at where you're looking at. All right, perfect. Let's go and let me share mine, which is it this one? Yeah, I think so. All right, this is it. Let me go to something. You're looking at Bitcoin, right? Hello, hello. Let me
Maybe
know
I
if you.
lost
Oh,
connection.
perfect. All right. Yeah, I saw a pause there. So you're looking at Bitcoin, right? You're trying to use it with Bitcoin, or what was the asset that you were looking at?
Yeah, Bitcoin, mostly
Bitcoin.
Bitcoin. I'm
Perfect. What
only
time
trading
frame?
Bitcoin. Usually I use 15 minutes and 1 hour.
All right. Let's do 15 minutes and also 1 hour. All right. So the first thing that we're going to be doing is adding the volume profile, right? Right here, you're usually going to be seeing a green box in here, depending on the version that you have. Right now, the latest version is version 3.3.5. All right. So let's use that just for now. So let me just click the gear icon. Let's disable those ones and then start from the beginning with what is it? Profile background. Here we go. Volume profile. So let's go really quick over the basics. So it is 300 what? Let's look back period. How many candles we're gonna be looking back, right? Also, I'm going to take advantage to answer a couple of other questions that I got into a different methods. So just in case you see me just diverging a little bit, it's because I'm also trying to answer other questions that I got here. So the point is that no matter what, you always got a fixed area right here, right? And this is not before it was a zoom in and zoom out adjustment, but sometimes you needed to have this low, and but you needed to go like very close in here, and because it was a zoom in and zoom out, that that adjustment was lost. So that's why now in the new update, that's why based on the community request, we have put it into a fixed area right here. So 300 candles, right? Usually you will gonna be adjusting on the lower time frame. So when you go into a higher time frames, it takes more candles back, and it doesn't matter if it takes more candles back. You're just gonna have more information, right? Right here then is where we start to getting a little bit more of what you or the definition, right? This definition that I see here, it is how many bars am I gonna be dividing this in, all right? So another thing that we pack together it is the POC, money flow POC. That's where most of the money has been rushing in or out, right? So not always the money flow POC, it pairs with a deficit, which it's gonna be my next step. This is your deficit. Let's do def here. What is a deficit? I would say this is the institution how we have called it, right? The institutional name. But I will digress just a little bit based because it how it works. It is bidirectional, which means usually deficit it is a plus minus negative, right? So usually you get a negative number talking about deficit. That's what the deficit name comes from, right? But the deficit is not always negative. You can have a positive deficit, which is not a deficit, right? So, just so we understand each other, we call this the deficit. but it doesn't always shows you the deficit because sometimes the equation gives you positive number, right? I'm gonna be going into it in a little bit in more detail right now. So let's get started now with not having too much clutter here, right? So sometimes this might be cool because you can see where the deficit is located at, and also where is the most volume is located at, right? Which are two different things, and be able to pinpoint exact areas. But at the same time, this is just sometimes too much information, and you don't need that much of a bunch of information. Therefore, I can go to 300, from 300 to, sorry, from 30 to something like 25. Usually my go-to is 24, 25, 27. And this is going to be dividing or grouping up more bars, right? So as you can see, now instead of 30, we have 25. Was it 25? Yeah, 25. And we can even go lower. I usually like to have something chunkier, right? And then fine tune it with something else. So that way I'm not debating whether this area or this area is gonna be the good one, right? I mean, I can even just go ahead and smash it out together. Like for example, I don't know, 19 or 18. Let's go for 19. Click away, wait for this little eye to stop moving, and we'll see more chunky areas. This is what I like, right? And this is perspective. Basically, if you like it that chunky, that's fine. If you like it more chunkier, right, you can do it to 15, and also that's completely right. Whatever works with your point of view. I don't know if that makes sense so far.
Yeah, perfect.
Perfect.
It's perfect. So
All right.
by assembling the length, the levels, sorry, that's make it less switching, right? Because it keeps switching a lot.
Yes. And this is, as you can see, it is moving a ton right now, right? We just leave it and then it start moving. But that's because look at the price action here. That is increasing a lot. It's moving fast. People are buying, right? Which means the added volume, because this is the 15 minutes. So depending on how much we insert here, the rest of the volume, well, not the rest of the volume, the rest of the outcome will change depending on what this level of importance is. Let me explain a little bit more here. So, for example, let's just say that this is, as you mentioned, that is it a lagging indicator? In fact, this is not a lagging indicator. This is not even a candle close indicator. This is as precise as you can get. And that's why it has a little bit more dynamic to it. You'll notice that you have a yellow number there. That is where volume allocation it's being added right now, like at the moment, right? So as you can see, it is changing, right? So then what is this thing? Well, let me get first to how the volume, this is raw volume, right? Buys and sells, just volume. So as you can see, this is the area of most volume, right? And as we can see, usually on those areas, there we go, we can see either ranging or big movements like that, right? So this is only telling you where we have a spike to volume, where we have exchanged more value, right? So volume in, volume out, usually that means an exchange of value because you put in money and you take out Bitcoin, or you put in Bitcoin and you take out money. So that is a value exchange. That's what this volume is representing, right? Then, depending on how important this volume is, you'll see a metric in here at the center. All right. This metric is telling you how important this chart is, right? You could have several hundreds. Like, for example, why this makes it important? And that makes it important because of also its deficit. There's a relationship here, and also because of the measurement of how much volume compared to the rest of volume there is. All right. So there's an equation here that's going to be taken into consideration how much volume was exchanged here based on this allocation. As you can see, we just broke out of that allocation. Let me show you. and we need to regenerate something. There we go. We're back, right? So basically, this, as you can see, it changed for a second right here, white. Usually that happens when we burst through, then create a new candle, and then we create a new bar in here. All right, just so you know. All right, and then remember that this is a fixed candle measurement, which means we add one more candle, we retract one more candle. So we're adding dynamic volume in, and we're subtracting already happened past fixed volume out. Would that make sense?
Yes, sir.
Perfect. So let me double down on this one because this is just a little bit complicated, and this is just to respond on why does it change so much. It changed so much because you're in a lower time frame. Therefore, you're going to have more variation between a known fixed value, which is we know right on this candle where it opened, where it closed, and how much volume that candle represented, right? That is fixed, and we're ignoring it as our new candles open. So we're pushing out known data and we're pulling in unknown data. We know when the candle has opened, and we just know on this candle how much volume till this second has input into the equation. Does that make sense? So,
Yes.
perfect. So we have a variable until it closes, right? So the faster we have that variable, the more change we're gonna have on this side. But since this is deficit, the bigger the change we're gonna have here. All right. So does that answers or fully answers why is it changing so fast on the 50 minutes?
Yeah, it's loud and clear.
Perfect. All right. Now that we understand why it changes or varies faster, let's now look at the deficit, right? Or at the, let me just zoom in so we can have a better understanding here, a better reading. So also, by the way, when we have low momentum or we're buying and selling, buying and selling, buying and selling like this, like we're not into a parabolic move, we usually, this doesn't change. Oh, look at that. Look at that. You see? There we go. You see how it changed like immediately?
New candle.
Yeah, exactly. New candle, zero allocation, then 1% out of 100 because just new, right? And then we have a deficit of this, but look at this previous one, right? Now it's zero because we just left one candle out. So this candle, like for example, look at how important this deficit is, right? Imagine when we get this 6% out of the equation. So we're going to have somewhere around a 6% change at least, right? That's what everything is going to be readjusted. So just so you know. All right. So the yellow number is basically where price is being, or where volume is being allocated right now. When we're moving parabolically, either up or down, and we're at the extended or at the end of these areas, that's when we have a ton of volatility on the metrics. When we, for example, we come back down, but we already have previous data, we're adding to the previous data measurements. Therefore, the volatility that we're going to be seeing is not at the ends. Therefore, it's not going to have a big impact in the center. All right. Just to finish it up on the changes in here. Now, this
Oh
is
my
raw
God,
volume.
man! I just
Right?
made $200 from the link. Thanks.
Nice. Shout out to you, my friend.
Perfect.
Take profit. Let me
Yes.
check mine. Give me 1 second. I'm also perfect. You know what? I'm
It's crazy.
yeah, let me give me 1 second because I'm also live trading. I will be taking some profits. Here. Not that. Oh, come on. All right, got it. Move stop loss to entry and TP number one taken 50% out. Let's go. All right, moving back into Bitcoin. Thanks for the heads up. I was completely distracted there.
Wow, perfect trade.
Perfect trade, yes.
Cheers.
Live trading, perfect trade. That's amazing. What's better to make money, right? Well, make money with friends.
Definitely.
That's much better. All right, now let's jump into what is the deficit. So let's just say, for example, right here, let's take a look at what volume we have here in here. This volume also has to do with, I mean, as we already know, with previous volume. Therefore, previous volume, previous total volume will be reallocated depending on the importance. This kind of things rarely change unless we have a big distribution. Like for example, a big area right here getting ignored, then well, then these ones will change not on numbers, but just in size based on the smallest one. Does that make sense?
Yeah,
All right,
okay. I got it now.
perfect.
All right.
So
So, OC, as a professional trader, sorry for interrupt you. I want to leave some space for the other people. As a professional trader, such as you, if you're trying to use the volume profiler here to add to your strategy, which time frame will you use?
the time frame that I'm looking at, like you will always see me talking about the 4 hours and then the 15 minutes. I have two different accounts. Well, to be honest, completely clear here, it's not that I have two different accounts. Is that I have one allocation or one wallet with X amount of USDT. And then I have another allocation with USDC. Does that make sense? Therefore, I use USDC to do 15 minutes trades and USDT to make 4 hour trades. So based on that, if I gonna be trading on the 15 minutes, I leave it on the 15 minutes or I leave it higher. If I see that this is moving too much, like way too much, by the way, Bitcoin should be now good for a short. If we close this candle like is, we could be going for a higher here, closing another candle somewhere higher, but then flipping back down. And this is important. Like for example, I'm gonna give you a live prediction. We're gonna be moving up. We're gonna create another candle that is gonna go higher, but we already have an absorption zone. The absorption zone is that big body wick. Look at what happens with absorption zones. Usually those are the ends or reversal areas, right? Not always, but not most of the cases, especially where we're moving parabolically. So the same thing is happening here. If I have another candle and then ends up being doji or not too big of a candle, and then I have a negative candle, that will be my entry for a short. And what am I going to be aiming to? I'm going to be aiming to two areas. First, where I have the most of the volume. But for me, where do I have the highest disparity? That's how I call it. Or the highest,
Nice.
yeah. Why? This is raw volume. This is, if you buy, you add volume. If you sell, that is negative volume, right? So plus volume, buying volume, minus negative volume. This is equal to these boxes, right? That's why you will always see, or you will always see positive number here, always, right? This cannot go below zero, but this one can, which means there was 1.3K deficit based on Bitcoin. Does that make
Mm.
sense?
Yeah, yeah. I used the
And
Brine range for 4 hours. It was perfect situation.
perfect, exactly. It's almost like that, but the VPVR, that the volume profile that you get here, it is just this. The volume profile that you get on TradingView, it is just this area. You don't get this. So for me, I usually just give it a little look at this once or something like that. I just kind of like a glance to it, right? But really what matters to me is this. Then for example, if I have a big chunk like that one, what I can do is ignore the base until the previous like that, and I just look at this, right? And from here, what is the most accurate? This one here is the highest. Or I can make it chunkier, right? For example, let's go here And let's do chunkier or lighter. We'll see what works the best. For example, if we let's do 10, click away, move this out of the way, look for regeneration. There we go, and we can see a cleaner and clearer area where to bet. All right, this for me, this is in the past. This has gone, but this where I mean where people bought or sold a lot based on the actual volume. So you don't need to actually have ton of volume to have a big battle. All right. So that's why you look at the deficit. So for me, this is always gonna be support or resistance. It doesn't matter. I basically ignore whether if it's positive of negative, but I will give it extra credits for the negative for a further continuation, or give it extra credit for the positive for a reversal. Does that make sense? Hello, hello.
Oh shit, I was talking to myself, sorry.
Oh no, that's fine.
It's really it was really perfect prediction. Going from the predictive range to the prime range down to the resistant of the volume profiler. It's really nice, man. It's really handy. I really appreciate the good work you're putting here.
Thank you very much. Now let me give you kind of like the meat and potatoes of this soup, right? What I really, I mean, we already have gone through the theory. We know what one thing means, the other what the other thing means, and also the importance based on itself, right? So these two are very very important. 94% and 100%, right? Let me now give you part of the theory, right? That mostly nobody, I haven't seen anybody else talked about this, but if you read two different books about volume and allocation, you can make that connection like straight away. Like if you look for how identifying smart money, right? Mr. Man, what's up? I'm in no position right now. Do you see a shakeout coming up? Yes, I see a possible reversal depending on this upcoming candle in the 15 minutes on Bitcoin. But you should, my friend, be taking profit on Link for hours. We talked about this today. And also, I shared that, remember? I shared this 2 days ago for the 15 minutes trade that reversed and then the 4 hour trade that we re-entered today. So, quick tip,
Yeah.
make sure that you are looking at that, Mr. Man. All right, sorry about that, Alba. I got stopped at 11:03. Oh, it's okay if I'll watch next one, brother. Yeah, absolutely. By the way, Mr. Man, when I do 15 minutes, it is not paired to the 4 hour. So it's not the same trade. If you get stopped out of the 15 minutes, ignore it and move into the 4 hour. And if the 4 hour gives you entry, you enter in the 4 hour. There are just two different worlds. Maybe I did not touch on that. I'll try to be more specific about it. All right. Maybe that wasn't me. Now let's talk about where is it? Come on, did I remove this? What did I do? Oh, I see, I see. I should be on Bitcoin. All right, I got it right here. Perfect. So if we talked about, I know this is a little bit more of theory, but here's where things start getting on how, so what does that mean, right? So you answer, how is that useful? So first of all, usefulness, where is most of volume? And usefulness, where is most of your battle? But also, which is not evident, where is the least of your battle, but with an added characteristic. This is just not the smallest. If it's the smallest and it doesn't have the next characteristic, ignore it. It needs to be small deficit, all right, and big movements. For example, small deficit. You see how small deficit this is? And look at how small of a volume this is. How, let me ask you this
Yeah.
question. How then, and let's do this line and then this other line. How then that small of a deficit and a tiny of a volume, how could that create that pump? How is that? How is that possible? Give it a shot.
Maybe it's a liquidation area for positions.
Some sort of it. you are on the right path, but you might be missing something here. So, smart money, it is those market makers that are usually looking at liquidations, or usually, guys, please take this with tweezers, right? Because there's no way that I can know, but based on the theory and how money moves, I can predict this, right? So usually are market makers, and usually market makers own or trade with as a partnership with a broker. So they know where people have placed their data. Let me ask you a question. Do you think that FTX sold its customer database?
Definitely.
Definitely, exactly. And if they didn't remember what the CEO and his girlfriend, what was it, the CTO? I don't know, the girl did with it.
Yeah, I think it's a city.
Yeah, they went into the order books, right, and saw how much money you got, and you got, and you got, and you and you and you and you and you. So when you start spending your money, here we go, here we go, here we go, spending, 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 spending. Oh, I don't have anything else to spend. I have bought it all, right? I don't have much more cash to push, right? And it's low Bitcoin now. So I know that. And I know at this point that I can not only buy Bitcoin for cheap, but I just need small amount of money to move the market. Why? Because you and I, retail, are exhausted and there's no one to buy or no one to sell. Does that make sense? So there is a gap
Mm.
on the order book. So it jumps, 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 jumps. So that's why we call it smart money, because they wait for all of us to fight it all together, get exhausted, and then they buy. They they move the market, right, with small volume. I mean, this is not, let's just, this is not small positions. This is a small volume compared to the rest of the volume that we had before. But if you take a look at here, maybe there's a 30 million position here, but 30 millions might be not as much as the $200 million that we spend it all across all together buying and selling. Does that make sense?
Yeah, yeah, it's perfect sense.
Exactly.
Big movement happening on these areas, gray areas. All right,
Yes.
I can get benefit and use that movement in my side.
Exactly. Yes, 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 yes. So that's it. You're going to be waiting to see where we have in the past, because there's no way to know the future, right? We're going to be seeing where we have in the past low volume, low deficit, plus big reactions. Does that make sense?
Hmm.
All right. So, for example, right here, I want to incorporate this so we can add a little bit more volume. I most likely we're gonna have a liquidity zone right up here. So for that, I can double click here, and maybe I can double this down. Let's do the background so I can see until where. There we go. So maybe I can add that many candles. So let's do, I don't know, 500. Click away, wait for the little eye to start moving, and then there we go. So now, since we went back in time, we can read what happened here on this volume allocation. All right. So once again, let me remove everything. What do we have? Let me just also make it much easier. Volume profile. What is the background? There we go. Okay. What we got in here? Let's make this with the help of these trend lines or these lines. Low volume, low deficit, and big movers, right? Also,
Hmm.
low-ish volume, low deficit is still big movement. Does that make sense? That is still here.
Yep.
All right. So, what do you think? And remember, this is an educated guess because we cannot know the future. All right. What do you think has happened with retail all along? And do you think that retail is now getting exhausted?
They're getting bombed now, and they're gonna take the bait, most likely.
Most likely, but there's an answer to my question. Here it is. How do I know if retail is getting exhausted?
The volume is getting lower,
The week.
and the wicks, yeah,
We have big
yeah.
wicks, right? Why? Because we push it and then boom, somebody sold on us. And we were not able to put it back up, right? Therefore, why? Because we are getting exhausted. Bulls are getting exhausted, right? Retail is getting exhausted. And that, my friend, is one of another characteristic of smart money. They're starting to test the waters, right? They said, look at that. Seems like based on our calculations, because retail has been buying like crazy, they might be lacking of buying purchasing power. Let's just do a test sell. This test sell, and was it where retail be able to push it back up? Seems so far. Look at the candle. The next one seems like, right? Same thing happened here. First candle test. Second candle execution. You see it?
Yeah.
All right. So what we need to wait is, are we going to be able to jump back up? If we're not, you jump in with slightly late, because you first need to watch it, right? With slightly late, with comma slightly late, smart money. Does that make sense? Because you need smart
Yeah,
money to
yeah,
lead the
perfect.
way, right? So then let's just draw it right here. Smart money equals what? What do you learn from the smart money behavior?
The right movement.
What was it?
The right movement.
All right.
The real
Big
movement.
big movements, right? Big movements with small deficit slash small volume, right?
Volume. Yeah.
All right. So remember, not just because it has small volume and small deficit means that it's a smart money area. Also, just so you know, this is going to be important because sometimes, like for example, right here, we're expecting the same thing to happen here. But sometimes retail, maybe today is 14th, right? Or almost 30th, end of the month, right? And they know, retail may know that their paycheck might be coming in on the first. So because they have FOMO, they might be get a loan to buy Bitcoin in this case, right? And then repay that deficit that they got, right, with their paycheck. That, my friend, because of FOMO, that's when smart money loses it. Does that make sense? And then the momentum of retail turns smart money areas into retail areas. Is that caveat
Uh-huh.
well enough explained or not really?
That was the most productive information I had in the last month, man. Cheers, cheers.
Thank you, thank you.
Definitely good dad.
Great. So that's why let's do one of those examples. That's why, there we go. That's why preview smart money areas sometimes, because of the end of the month, because of people having extra money, right? They fail on retail and pick back up, right? So just so you know, smart money areas can, depending on the microstructure or micro things or events, turn into retail areas, right? And fail. Because remember, they try to do what they can, but at the end of it all, you and me and you and you and you and you, all of us collectively make most volume, and there is no way they can fight against all of us together. That's what happened with the what was it? It was the Blockbuster, right? Was it Blockbuster, or was it no GameStop? That's
GameStop.
what exactly. That's
GameStop.
what happened with GameStop, right? I mean, remember
Yeah,
how
we teach them a lesson
retail.
there.
Yeah, remember how us retail put all of those guys on Wall Street shaking, right? And this is something that I think is not being pushed enough. That we need to unify against those big monsters. And guys, we are gonna be taking them to their knees. All right, just so you know. So other than that, let's move out of that and let's go for the next thing. Let me just clear this up. All right, so we know how to identify smart money areas. Therefore, it's always mandatory to use a stop loss, because you never know when retail is gonna just turn on you, right? And then FOMO in all at once because of something that you maybe ignored or something that just happened, right? Like for example, Trump getting shot in the ear, right? And then crypto, boom, went up, right? So I mean, how could you predict that? Well, you couldn't. That's why you use a stop loss. All right. Now let's go and take a look at what it's being called, what I hate, but this truth, dump money. So the inverse of smart money, or what we call retail money. Retail money is the opposite. If we're talking about small volume, small deficit, what are we expecting with retail money?
Burned.
What is it?
To be burned. Like they lose their money on these positions,
Oh,
on these areas.
well, let's follow this. Let's follow You're right. You're right. They could be burned. Yep. But that has to do with the battle within themselves. That I'm going to touch on it right now. But let's follow up, kind of like on the same on the exact opposite of the retail money, so we can connect them each other up, right? So smart money, low volume, low deficit, right? Hello, hello.
Yeah, I lost you. The voice was gone. Sorry.
All right. Smart money equals low volume and low deficit with big areas of movement. Right. Correct? Are we correct there? Are we okay there?
Yes.
What would be the opposite of it? What will be
Retail money, where's the big movement and big deficits?
almost there? Almost there. If we talked about low volume, then retail money is the opposite, big volume, right? If we're talking about small deficit, we're talking about retail, which is the opposite, which is big deficit. And then remember what's the last part? Big movements. So what is the difference, or the opposite of big movements? Ranges, right? So neither going up or down. Does that make sense?
Yeah. Yeah.
Perfect. So remember, if this is a big, I mean, if this is a smart money area, then this is a retail area. Why? Big volume, big deficit, and price ranging. It started here, went down here, and ended up being at the same freaking place. It did nothing, right? And if we go slightly before, same thing. There is a ranging here, right? And if we go before it, again, a little ranging here, right? And if we go a little bit before, well, then slightly range, but we all remember what happened here, right? Politicians talking right there,
Nice.
right? So we know now the behavior between smart money and retail money. So we usually want to avoid usually want to avoid jumping in retail money areas. Why? Because I'm not gonna be putting my money where it's not gonna be being profitable, right? So if I know I'm in a ranging zone, I'll rather, for example, take a look at my consolidation score, right? And when consolidation score goes to 10, which is highly consolidation, but at the end of that consolidation, that's when I start to position myself in the area of the trend, which is going to be shorting at the top, right?
Yes.
Perfect. Then now let's predict what's going to happen here. Again, remember, this is only using one tool, so we're missing at least other two tools, right? But just for the sake of this class, to fully understand what's happening with the VPVR, let's try to make a prediction. All right. Low volume, let's make that a box, or even two boxes here, or two price ranges. Low volume, low deficit, big areas of movement. Low volume, low deficit, big areas of movement. What should we be doing here?
Waiting for the movement of the smart money and see what's
Well,
gonna
yeah,
happen.
waiting for the candle confirmation, right? Which is this one. Also, you can do, I mean, we can do a trend line, and on the trend line breakout, that's when we enter, right? So, yes,
Definitely.
we should be looking for a short, all right? Let me show you something funny here. So, well, not funny, but let's go to the next thing. So, if we are falling, for example, if we are falling here hard, and then I know we have right here a retail area, right here, retail area, and I'm in lost, all right, I'm losing because I forgot to set a stop loss. I'm trapped within the trend, or even I am DCAing in. These areas give me not only volatility or range, that also give me the opportunity to buy low, to average down my position, and when it bounces up, close my position at zero lost. Does that make sense?
Yeah.
Perfect. So this is a big advantage of knowing what retail does. So if this is your first entry, well, then you usually avoid the beginning of a retail area, and then you want to jump in at the end of the range that retail area does, right? So let's just think that we break out here, and this is somewhat a retail area, right? This is gonna be a what? A pause, right? Or a little support, right? So not only that, let me draw a little rectangle here. Look at that. Is we're gonna be going down, and look at with I mean, this is what is funny. Look at where it's coexisting with the trend line right there. So when the price action gets here, it's going to be both in a retail area and also in a support for the trend line, right? So this is where the price is going to make a little pause. So you can either prepare, take profits, or plan your next entry. Does that make sense?
Yeah. Yeah.
Perfect.
Definitely.
So what are we going to be doing? Maybe something here. If we know there's a chance for the price action to stop, and we are still above, let's just say that we do this, right? We are still above the zero line, and we are here, we know it's going to be making maybe a pause. This is one of the areas that we are what we want to jump in. I know I said we usually try to stay away from retail areas, but in this case, it's acting as a support. It's stopping what? The fall, because it will make something like this. And if I can make something like that, guess which pattern I could be forming with a neckline. And then if I break up, I jump back in with a long. And if I break down, I jump in
Shorter.
with a short. Exactly. So by understanding what is a smart money area and what is a retail area, we can take decisions. Like for example, right here, it is too late for me. It is way too late. But right here, entering in a smart money area. But I see there's two smart money areas right here, one close to each other, which means that this smart money area could fail. Nonetheless, I can do a short position right here because I'm at the top, flipping back down, right? Set my stop loss at the previous high, aim at the next support area, and call it a day. Half of a position. Why? Because I'm de-risking here because I know it could fail. Failed, right? Same thing
Yeah.
that happened with me. What was it? Where was it? Same thing that happened with me here on the 4 hours. I tried to long this because it was a retail area, all right? And on the 4 hours, it was something like this small movement, right? In the 15 minutes, I could done something differently. But on the 4 hours, this was a little bit of a range. And then I was expecting to have a dead cat bounce, a bounce all the way to this area, and then a continuation down, all right? Instead of having that, well, then it just went straight forward to the downside, which is fine. And then where do I aim for? For the smart money area. I jumped right there on not only on the smart money area, it just so happens that because that was where liquidity resided, well then in the 4 hour time frame, that was right here, dynamic reactor. You see that?
Where's the magic happen always?
Exactly where the magic happens. So remember to use different tools, right? That's what I can do. For example, we already have made an analysis that this is a, what is this area right here? Well, come on, it's just to, let me zoom in. We know this is retail area, right? And also we have a liquidity area right here. And that liquidity, it's negative 26, which means most likely we're gonna do what? We're gonna bounce down, most likely, right?
Yeah.
Perfect. So based on all of that data, and now look at that, we're having a doji candle, right? We could be predicting what? A dead cat bounce if we ended up closing another candle here for the 4 hour. They're exactly the same after the 15 minutes. What am I waiting here on the 4 hour?
Or a retest.
Remember what we wait in the 15 minutes. I told you, for example, look at the wick, right? Look at the wick. If we close this candle with that big wick above, we're going to be waiting for one more candle to start closing below. And that's going to be our entry for the short.
Definitely.
And, and, and flip of the ribbon. All right. So that's when we start adding stuff to it.
Oh, that would be a perfect then.
Exactly. Perfect. All right. And then I see you raise your hand. Come up into the stage if you want to. We are basically at the end of the class. I think this has been a great class. So, Oba, thank you very much for your questions. Always very, very good ones. And then if you want to jump in, also, Oba, any questions or anything else that you want me to repeat, re-explain, or dig farther within?
Sorry, it was a mistake, Ozzy. I didn't mean to put my hand up.
Oh no, that's fine. Don't worry, my friend. Aman, now
This
that
was
you're up
good,
here, thank you. Any
really
questions,
good
Aman?
session. Yeah. I joined in late, really late. I wanted. This is not recorded, by the way, is it? No.
I did. It's a little bit late
Ah,
recorded.
nice.
Yes, I'm gonna be uploading
But
it. Since Alba asked
sweet, sweet.
a very interesting question, I thought to record it. So yes, it is being recorded.
Thanks a lot. Thanks. No
Anytime,
worries.
my friend.
Yeah, I've been following you, Piper, everyone, trying to just build my own strategy to, trying to absorb. But yeah, this session, I think the one of the most comprehensive volume profile session. Yeah, thank you.
Anytime, my friend. Anytime. All right, guys. Thank you so much for joining. It's always a pleasure. When there's groups, small groups like this one, I'm gonna be bringing you guys. Whoever raises your hands, I'm gonna be bringing you guys up here so we can have more of like this sort of like one-on-one. Especially because I think it enables me to understand a little bit more what is in your mind and have a little more fluent Q&A, right? I think today worked beautifully. Alba, thank you very much for jumping up here in the stage with me, and also thank you very much for your questions. Always, 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 they're very great. This session is being recorded. I'm gonna be processing it in Bigo. I'm gonna be uploading the 2 classes today. A little bit late because I have another meeting right after this one. But other than that, count with both of them being uploaded to date. So, guys, thank you so much for joining. And as always, see you guys tomorrow.